Nike has built one of the most iconic brands in the whole world, representing some of the top athletes not just now, but in history, and being part of history's most iconic sport moments. And with such a strong brand, you would think that their stock is absolutely crushing it. But the reality is much different, with the stock being down even as far back as 5 years. In this video, I'm gonna provide you with a full breakdown of the stock, and this is gonna be Warren Buffett style. And we're following this investment style because it allows you to find stocks that have returns like this, and this. The first tenet of good stock analysis is to analyze the market. Before we analyze the market itself, we need to know what Nike's main market is. For this, we can set up a spreadsheet template like this with the data provided by Y-Sheets, which retrieves this data straight from the SEC. And in this case, we can see the total revenue for Nike in the last 5 years, and we can see the breakdown of that revenue into the different segments where the company operates. As we can see from this percentage analysis, we can see that footwear is the highest by far, and after that we have apparel. So when we do the market research, it's very important for us to focus on the footwear and secondarily on the apparel. Product, service, and other is something that we don't really need to take too much into consideration. Now, when it comes to the market growth, we can see that the market growth is expected to be somewhere between 4.3% and 3.4%. So this is not the highest number that you can have. However, Nike does have some opportunities to be able to grow faster than this particular rate, but it really needs to invest in its products to be able to take advantage of some of the new trends that are taking place in the market. So we know about orthopedic and sports shoes. We know about the growing emphasis on sustainability and building products that are sustainably sourced, that have a lower climate footprint as well. And then opportunities to collaborate with fashion designers and other celebrities that are not traditionally in the sports world is another trend that Nike should really explore. And we're going to talk about what the company is doing to be able to keep up with the innovation that is required to grow in this particular markets. One thing that does help Nike a lot is that a lot of the revenue generation in this market is happening in the United States. So if we go back to the spreadsheet, we make this function call right here from Y-Sheets, we can see the breakdown of the revenue by different geographic segments. And what we can see is that North America, which mostly covers the US, Nike is extremely well positioned to take advantage of this opportunity. Some of the other markets, you know, they still have a lot of growth and they're not as established. So that's okay as long as the company focuses on what's going to bring the best results anyways. Now, in terms of the competition in the sneaker or the footwear market, we can see that Nike is currently ahead of the game, with the closest competitor being Adidas. After that, the competition significantly diminishes. Now, the thing is, there's some new market entrants that are really growing a lot, and so Nike has to keep a close eye on those and ensure that it can be able to keep up with the competition. Here's another graphic that really helps to demonstrate how dominant Nike's brand is. So we can see America's favorite sneaker brands, we can see Nike's #1, and not only are they #1 with their Nike brand, but they also have one of the most dominant brands with Jordan at 35%. And then we can see some of the other competitors here as well. So the combination of Nike plus the Jordan brand, all of which are part of the parent company Nike, really makes it so that the company has a really strong hold on this particular market. Now, moving up to the second largest segment, we have the apparel market. And in this case, this market is projected to grow between 2.8% to 4.1%. So again, not a lot of growth for this particular market, but if Nike does play its cards right, it can of course continue to take advantage of some of the trends that are taking place in the market. One of the trends that Nike really has to take advantage of is this one right here, the largest part of the market is women's apparel. So if Nike can continue to develop good products that women all over the world like to wear, then it's gonna really help to continue to grow the company over time. Other trends that are taking on place in the market are the growing demand for sustainable and environmentally friendly products. We kind of already talked about that for the footwear apparel as well. So the innovation there applies to both segments of the business. And the other one is the emergence of direct-to-consumer brands. So Nike has really underwent an effort to spend a lot of money and invest a lot of resources into revamping their e-commerce efforts. We're going to talk about that later to see how that go and if that's going to have a negative or positive impact on the company. Lastly, for Nike to be successful in the future, the company has to do really well on social media, which means continuing to create content that's going to generate attention and interest from all types of potential buyers. Something else to mention is the sportswear market share by the different companies in this space, and we can see that the main players are Under Armour, Puma, Adidas, and Nike leads in all of these different categories, with China being such a dominant position for Nike. Now, of course, it's all gonna come down to, can Nike continue to grow this number? Can Nike continue to innovate and generate new sales growth? And we're gonna get into that as we go along in the video. So overall, for the footwear and the apparel market, we can expect quite low numbers, so it's very difficult for us to expect Nike sales to continue to grow at a very high rate, and this is because Nike is already the leader in this space and the space is not growing a lot on its own. However, this does not mean that the stock can have a pretty good appreciation from where it's at today. We're going to talk about that later on as we go along. Now we're going to move into criteria number 2 of the Warren Buffett stock analysis process, and that is to analyze the product and the quality of the product itself. So just doing a quick Google search, we can see that in terms of quality, it looks like the company is really dropping the ball on this one, and this is because it just seems to be getting worse over time, which is not a really good sign at all. And there's so many blogs that talk about this. One of the resources that I like to use for this is Reddit, because people like to be honest. Now, however, sometimes people really exaggerate. Like if you look at some of these posts, people really exaggerate the impact of like some of the issues that they have. But in general, there does seem to be a consensus that the quality of their apparel and their sneakers is dropping over time. One thing that is good is that the company does have top tier customer service, so that does help to offset some of those issues. But even here, for example, I was looking at this video speaking about Nike's growing quality control issues, and it's a real thing. Hopefully something that Nike can fix and turn around, because otherwise it could lead to some serious issues for the company long term. Even just doing a simple search to analyze the analytics of their website, we can see that their traffic has declined as well, from a peak of 201 million visitors per month to now 167. So this is quite a considerable drop. Again, just something to keep in mind when investing in Nike. One thing that the company does really well when it comes to product is the fact that they have so many different segments. So for example, we can see they have a segment for basketball, for soccer, etc. And then they also have tons of other categories such as like sportswear, casual wear, etc. And then because of that, that really allows the company a lot of freedom to have different pricing strategies around different pricing and different segments of the market. So there are shoes like, for example, here the Air Forces that, you know, are very popular right now, and so the price can be really jacked up, even though the cost to produce this shoe may not be that high. However, there's some shoes that may be just kind of like more everyday wear that the Nike can price at an affordable rate to be competitive in the market. So overall, when it comes to the product for Nike, the company does a good job. The one thing to look out, of course, is the quality control, because that can really tear down the quality of the brand. But otherwise, the company is well positioned to continue to do well and continue its dominance in the market. The third tenet of the Warren Buffett stock analysis process is the company health. Using a tool like YSheets, we can simply enter the company ticker and get the company's financials so that we can analyze the current financial health. When it comes to the income statement, the company does not have extraordinary revenue growth, which is one of the reasons why the stock has really taken a dive over the recent years. We can see the numbers right here. Now, one thing that is positive is that the company is becoming a little bit more efficient. So if we look at the gross profit ratio, we can see that over time this measure is improving. So that is a positive step. The same thing applies to the operating income ratio, where we can see the ratios improving over time, which is another positive sign. Now, one thing that is not really good to see is the fact that the net income growth is kind of all over the place. So in this case, we can see this is a positive number, we're here negative number, positive number, negative number, instead of being like steady growing over time. So not the best sign. However, the company has managed to generate significantly more profit over time. So we can see, for example, from 2 billion all the way to 5.7. That's quite a big jump. That has been good. The other thing is similar to the gross profit ratio and the operating income ratio. The company is becoming more effective capturing profit. So we can see an increase in terms of the net income ratio. Lastly, we can see a little bit of a decrease in the number of shares outstanding, which is a good sign, meaning that the company is doing some share buybacks to boost the value of the stock. In terms of the balance sheet, we can see that the company does have quite a bit of current assets to be able to cover its current liabilities. So we're looking at a 2.5 number right here. The one thing that is a little bit concerning is the debt, and we can see the debt of around 8 billion is roughly half of the total stockholders' equity, so not the best indicator. However, as we can see, historically this number has decreased over time. Thankfully, to have a company that is over leveraged is not a really good indicator, especially as it struggles with different other aspects of the business. You can really put that company into financial pressure, but luckily it looks like the company is handling this the right way. Stockholders' equity though has not grown significantly over time. It's grown more so like if we look at like 5 years from now, 4 years from now, but from the past few years we can see a decline, and now here it looks like the company is getting on the right track. Something to flag and keep in mind for this particular company. On the cash flow statement, we do see a positive trend right here on the operating cash flow. For the investing activities, one thing that, it could be good, could not be good, but it doesn't give me the best feeling is the fact that the company has positive cash flow from the investing activities. This means that it's selling off different assets instead of investing in more assets. Now, this is just probably the company kind of being more financially responsible and careful, but something to keep in mind, because generally is a good thing when companies invest, because hopefully those investments are going to pay off over time and the returns are going to be generated. In terms of financing activities, we can see that the company is giving off a lot of cash right here, and most of that comes in the form of dividends, which the company has a pretty good dividend yield. And the other thing is obviously like buying the stock shares, which we already talked about before. Overall, we can see that the operating cash flow is growing. Capital expenditures are kind of like now on a steady path. They're not really growing but not really declining, and the free cash flow, something that is very positive, that it is continuing to grow over time, which is a good sign for shareholders. So overall, the company is financially stable. However, there's certain flags to keep in mind. One of them is the debt, the other one is the stockholders' equity, and then we also have the instability of the net income growth. But there's nothing too alarming that indicates that the company can run into bankruptcy issues or liquidity issues, at least in the near-term future. The fourth tenet to analyze a stock effectively is to analyze the management team, because they're the ones that are going to execute and do either good things or bad things for the company. So in this case, looking at Nike, we have Mark Parker as the executive chairman. He did a tremendous job as the CEO of the company, served for 14 years, and in those 14 years the company did really well. Now the CEO is John Donohue, and he had a lot of experience working for different companies, being in the boards of different companies. You can see he was also a consultant for Bain & Company for almost 20 years. Now, one of the issues that we've seen is that consultants that become CEOs, some of them can be really good, but some of them can have a really hard time into translating, principles and concepts into actual action that takes place in a company. So perhaps not the best sign and something to keep in mind. However, he does have the company of a lot of executives like Nike that are very experienced, like Mark Parker and also the original CEO, Phil Knight, who are gonna be guiding him so he makes the right decision. So maybe not as much of a red flag as you could think of. Other thing that is a bad thing is the fact that there hasn't been a lot of insider buying for Nike stock. That's really a problem because ideally you want the management to think that the stock is undervalued and so that they would be buying shares and take a piece of the upside as the company continues to improve over time. But in this case, it seems like the company executives are just like selling, and selling. So not the best sign. Now, in terms of the compensation of the management team, we can see that there's different criteria. So the achievement against approved financial measures such as revenue, net income, and earnings per share. I would like to see the entire breakdown, but I'm not able to find the information. However, one thing that I would like to see be included is free cash flow because that's a really good measure for shareholders. Now, other leadership achievements and blah, blah, blah. I mean, that's just talk to, show that the company has other interests besides that of the shareholders, which sometimes can be good, sometimes, it doesn't really work out. In terms of the pay scale of the CEO, as you can see, he makes quite a bit of money. But I mean, to be the CEO of a company as big as Nike is not an easy job. So yeah, it's probably what other CEOs with like similar company sizes are paying. So nothing too crazy. And then the other team members are making a good amount of money as well, but nothing too staggering right here. Overall, I would grade the team management as like okay, nothing too exceptional. There's a couple of red flags to watch out for, like we mentioned, the insider trading, etc., and the compensation, but it's nothing out of the ordinary, and it does not prevent the company from still performing and having solid performance in the future. The last tenet of the Warren Buffett stock analysis process is the valuation. And in this case for Nike, this does not look promising at all. So in terms of the valuation model, there's many different ways to value a company. In this case, I just put something together real fast based on all the information that we've analyzed. So what we projected is the 4%. That is very closely followed by the expected market growth rate. Now, for Nike to do better than this and to stay consistent, as we saw from the financial performance, is very difficult. So, maybe you could move this to maybe like 6%, maybe 8% if the company executes everything really well, but I just don't see that happening. The projected value, so this would be the price to sales ratio for the exit. For this, I put a 2.8. That is the current ratio right now, and historically the ratio has not changed a lot. So as you can see right here, by the way, I'm getting all this data using the Y-Sheets formulas that I mentioned to you, just in case you want to find out. And as you can see, this number does not change a lot. I mean, the max we see is like 3, 4, but this is when the company was growing a lot. 5, 6 was the highest. And then if you look at it on a yearly basis, it doesn't fluctuate a lot. I mean, if you want to be a little bit more aggressive, like you could put like a 3, and then that would give you this number. The discount rate, I put 15%, which I think is reasonable in today's market conditions. But as we can see, even with this aggressive estimates, it's still a negative 25% downside. So my final numbers would be the 2.8, and then I would put 4% over here. And then this would give me a present value per share of 58.02. Right now, the stock price is trading at $83 per share roughly. So this is a negative downside, but again, we can just put this on our watch list, and then if the price significantly changes, then we can start to look at investing in Nike. One more thing is that when it comes to the sensitivity analysis, all these different scenarios, they show, by the way, this is just rounded. Let me just add this right here. Yeah, there you go. These are all the different scenarios, and all of them show a negative outcome. So not the best thing to happen. And for that reason, I just don't think that Nike is a good investment opportunity right now. There's tons tons of other companies that are actually growing and really have a possibility of changing the market and becoming the market leader and having that translate to a higher stock price, and Nike just doesn't seem to be that number right now. I hope you enjoyed this video. If you did, make sure to subscribe to the channel, turn the notifications on, and let me know in the comments what video you would like to see next.